Let's say tomorrow, during your normal, everyday, average life, there was a market crash that impacted you and everybody around you. This happens actually quite often. You hear it all the time in the news and social media, in politics. Market crashes happening to have happened in the past 5 years. We had one during the COVID pandemics, and then we had one during the Trump tariffs. When you hear about these market crashes, what is your first instinct to do? Is it to weaponize them in politics? Is it to panic? Or is it to actually start investing? If you already have money invested in a retirement account or just stocks in general, this market crash might not be the most appealing thing in your life. However, this is actually the best time to buy these stocks. Now, I'm mostly going to be talking about safe stocks like ETFs and dividends and stuff like that. But I'm telling you, you can make a lot of money guaranteed off of these stocks. And I'll tell you how. In this video, I'll explain to you exactly which stocks to buy, why you should invest in these stocks, and I'll show you that I've already invested in some of these myself and what I've gained so far during this market crash that we're currently in. If you're watching this video, I assume that you've already heard about the Trump tariffs and how they've affected the market, making most of these stocks go down. However, every single time a market crash occurs, it's guaranteed that all these stocks will bounce back. Unless you're investing in a very risky stock, these stocks are guaranteed to bounce back. The only instance in which these stocks would not bounce back is if the United States somehow got nuked or got into a civil war or something major like that occurred. If you're already trading stocks, these stocks are going to be stocks you have already heard of. Like, everybody has heard of almost all these stocks. This is more for beginners. So we have the S&P 500 ETF. Now, if you don't know what an ETF is, this is a bundle of stocks. This is where whoever created this S&P 500 goes and takes 500 of the top or just well-doing stocks and puts them in a bundle so you don't have to personally go in and diversify your portfolio. If you buy the stock, it's technically diversified with this one stock. And because of this, ETFs do reflect the overall health of a market sometimes. And because the United States market does well almost every single year, despite what people tell you and try to fearmonger you to believe, it does do well every single year, and I'll prove it. We are basically guaranteed to make money every single time this stock crashes. So up today's date, I am voicing this video at May 16th, and around March 14th was when this stock started to crash along with the market. The price on that date being about $562. Now, I want to note that if you don't have this much money to be investing, it is okay because Robinhood allows fractional shares. Now, if I'm being honest, I don't even own a full share of the stock either. I only own 0.9 of the stock. Now, that 0.9 of a stock I own is at an average cost of $546, which is actually below how much it dropped on March 14th. And that's because the stock obviously dropped even lower, which the lowest it dropped was on April 8th at $496. So as I bought this stock, the stock continued to go down, and instead of panicking and selling, I actually had bought more stocks because I had known that this stock is a pretty strong, consistent stock that wouldn't drop down, like I said, unless something major happened like the US getting nuked. So the highest I bought this stock for was $570, and the lowest I bought it for was $509, and this averaged out to about $546, and now as of today's date, the stock's at $594, giving me $45 of profit. Now, this obviously could be more profit depending on how much you invested, and this stock before the crash was a little bit over $600, and I can almost guarantee you that this stock would go back to that price and will go higher within the next 5 years. And like I said at the beginning of this video, the last time these stocks have crashed pretty heavily was during the COVID pandemics, and at December 31st, 2021, this stock was at about $475, and the lowest it was going in this time frame was during September 30th, and it went down to $357. And now you see how the stock has already bounced back. Imagine if you had invested back in September of 2022, your money would have almost doubled by now. And this goes for almost every single safe stock. Like if you invested in the NASDAQ, the Dow Jones, these are all guaranteed to bounce back within a market crash. Now, it's always good to have investments in these stocks over an increment. What I like to do is take a certain amount from my paycheck, say like $1,000 or $2,000, and over the month till my next paycheck, I like to spend a little bit of money, like $20 every few days or so on these stocks. And then if there's a huge amount of crashing, I like to increase that. So let's say there was a large crash, I would then up that to $150 or $300, and I'd like to have a little bit of money on the side saved for that exact moment. I feel like it's almost stupid not to invest like this. Like if the market crashes and these stocks are now $200, $300 off and they're guaranteed to go back to their original price, why would you not buy that? Like if you saw a car for half its price and you knew this car was a hot car and people were guaranteed to buy it off of you if you were to sell it, and it was going to go back to its original price, would you not buy that car and resell it? My advice is to save as much money as you can and then train yourself to hear when you hear it in the news and hear people talking about, oh, there's a market crash going on, go to your stock app and buy these stocks. Another stock I've been looking at was the Schwab US Dividend Equity ETF. This is running at 26.45 is the current date of making this video. And funny enough, this is 20 cents less than what it was a year ago. And I assume that because this is an ETF of the top ETFs in the country, that it immediately go back to its peak price of 29.50 and if not higher. You got to see it like this, like almost like market crashes for stocks like this are literally a time machine to go back in time to buy the stock when it was cheaper. Like you see it like this, the stock was at 29.30 at its peak. At a year ago of today's date, it was at 26.6. So like this market crash is like a time machine to about a year ago when the price of the stock was $26. Now, I'm going to be honest, this strategy is not going to get you filthy rich overnight. This is more of like an advanced savings account. This is just a strategy on how to play the market in a very, very safe way where you're almost guaranteed. Like I would say this has like a 95% guarantee rate. Actually, I'm willing to bet that this has a 99.9% guarantee rate because even if you invest at the wrong time, let's say you invested right before the market crash and you're freaking out, oh my God, I just invested my money and the market just crashed. Well, it's going to go up almost immediately within half a year. I mean, the only way where you lose in the situation is if the market completely crashed due to like an extreme measure, or you just somehow coincidentally died in the next 6 months. But just to show you how much money you could have been making over this stock market crash, I'm going to be using some hypothetical money and a hypothetical time machine, and we're going to go back in time to the perfect peak values just to see how much we could have been making if we invested at full force. Again, we're going to be looking at the Schwab US Dividend Equity ETF. This stock didn't really drop that much because it's based off of the dividends and the dividend statistics. This is where, you get paid out based off of how much of the stock you hold. And so the stock price is based off of more like dividend yield and stuff like that rather than the market. Yes, the market does affect it, but not as much as the other stocks we'll be going over. And I will be making a video on dividends, so if you want to hear about that, make sure you subscribe. But before the crash, this stock peaked about $29.50, and after the crash, its lowest was about $24.32. So let's say you had invested into 100 of these stocks. That would be $2,432. And let's say it goes back to its original price of $29.50. You would then have made around $400, which again really isn't that much. But let's say you just had $2,400 just sitting around. We're going to put it in your savings account. You would have still $2,400 if you put it in your savings account versus almost $3,000 if you'd invested it. And plus, since this is a dividend, they're also going to pay you a percentage, which it's not going to be a large percentage, but it's still going to be a few extra dollars on top of that. But let's look at the other one, the S&P 500 ETF. This, its lowest was 496 on April 8th, and before it crashed, it was at 612. So let's say you hypothetically had about $5,000 to invest in 10 of these stocks, and it almost is guaranteed to go back to its 612. You would have made $1,120 guaranteed. Like, these stocks are guaranteed to go back up. Now, the thing about this is that this is the best case scenario, which almost nobody is able to get. Nobody's able to predict perfectly where this stock is going to land before it starts coming back up. but it will eventually come back up, and that's where the money is made. So depending on, this is where it is kind of luck based, where, let's say you did hypothetically get in at the very lowest point. The hypothetical we went before is how much you'd be making. But let's say you invested on its way down and invested a little bit on its way up as well. You would still make a decent amount of money. But I mean, it's luck based, but there's no losing. It's luck based on how much you can potentially maximize your gains. It's like gambling, but when you lose, you win your money back and a little bit more too. So that's why my strategy is when I see the stock coming down, I invest a little bit. As I wait a few days, and as it keeps going down, I invest a little bit more, a little bit more, a little bit more. As it's rising, I'm still investing more. And then once it passes its peak, then I'm just waiting for it to crash again. And then as it keeps going down, I just invest a little bit more, and then, you just rinse and repeat. That's how it should be. You don't want to be throwing your money blindly at stocks. But if you have any more advice or anything you want to say, leave a comment down below. Make sure you subscribe for my videos and hit that notification bell so you don't miss anything.